Hello everyone, I'm Russ,
And I'm Giles.
and we're the Morrison Mortgage team. Today we have another update for you. As everyone knows, or as you may know already, is that the Bank of Canada has increased the prime rate by 0.5%, or the overnight rate, but it's highly expected that the prime rate, which is the rate through all the lenders, will increase by 0.5% as well. Currently that rate is 5.45%, and it will very likely by the end of the day or by tomorrow be 5.95%. So that is the update on what's happened today. Who is affected by this, Giles?
Yeah, so when the Bank of Canada makes these announcements, it affects the prime rate, kind of all things considered, and this affects people in variable rate mortgages. So we've discussed this before as well. There are two types of variable rate mortgages. One's where people's payments stay the same, and one's where people's payments change. So if you have a variable rate mortgage where your payments change, so with our clients, most likely anyone that's not with TD, the majority of these, the payments will change. As the rate has changed today, so your payments will be going up. Anyone that is with TD on the whole, where your payments stay the same. I know clients have been in touch as well regarding the trigger rate, and we've discussed that in previous videos. Your payments will still stay the same, but now with each payment, you'll be paying more interest as a portion. And it's now at the point where some people's payments may not be covering that interest, which is the trigger rate, which we've discussed before. So if you're in those circumstances, do reach out and we can go through things for your unique situation. But that's who's affected, essentially variable rate people.
Yes, and that's the key is with the TD mortgages is that we are getting a lot of calls on that right now, so feel free to reach out. But by calling the TD Easy line, they can help you as well. But we want to still have some connection with you so we can kind of advise you on what you should do moving forward and if there's anything we can do to help. Also, if it's an unsecured line of credit that you have, that floats with the prime rate as well, so those would be increasing as well at this point in time. And that. Okay, so the general prediction. Now, the past few meetings, the Bank of Canada has used words of aggressive and hawkish and that sort of thing. We are getting a different vibe or feeling from this particular announcement. Giles, what's the general vibe from this one?
Yeah, so my feeling is and how we've discussed this in the office as well, the comments are a little softer than they have been. Also reading, kind of other industry experts' opinions on what this means and what this may signal is that this may suggest that there may be one more increase and then the rates will be held. So essentially their comments and the nature of their comments are saying, yes, we will have to keep, we will increase the prime rate again if the inflation data, but depending on the data as well. But that they are being a bit softer with these comments, which is widely kind of thought, and we agree as well, that this means that the tide is turning slightly and that they are preparing, that they're aware that potential recessions around the corner and that they will need to kind of start planning ahead, so they're being a bit softer. So what this means for the future is we are predicting one more increase. The next announcement is December the 7th. Potentially kind of 0.25 or 0.5%. This is still kind of unsure. It depends on the data as well, but maybe 0.5 is a bit more likely as the final increase, and then things will be held. But yeah.
Exactly, and that's the one thing too is we actually were all anticipating a 0.75% increase on today, and it actually is a bit of a breath of fresh air is seen as being 0.5. So we do feel that we're probably going to see another increase, as they're already kind of, giving us, throwing out ideas of this is not the end. It's likely we're going to have another one. So it could be a quarter, it could be a half. We'll see December 7th is the next meeting date. And then the anticipation is that barring major recession, if that happens, we'll probably have these rates sitting there for a better part of 2023 before we see some drop in rates and that sort of thing. So that's where we're sitting at right now, but the vibe is getting a little better with Bank of Canada. There has been some small increases with inflation, not as much as they want to see. They want to be in that 2% target, but it has come down, but just not where they want to be at this point. And then now the question is we have another increase. What do we do? What are our options? As we know, for TD mortgages, your payments won't change, but is likely going to be getting some correspondence from TD on this to advise you that maybe you have to increase your payments or make a lump sum payment. As noted, feel free to reach out so we can direct you if you need our assistance. If you're in a mortgage, say with Scotia or any other lenders, your payments will go up. It's a 0.5% increase, so that's going to be about $26 for every 100,000. And then we are getting a lot of people, asking us, is it time to lock in? Giles, some thoughts on should we lock in? Should we stay where we are?
Yeah, so anyone in a variable rate mortgage, you have the option to lock in for the remainder of your term to a fixed rate without penalty. So a lot of people are inquiring on this, should I lock in now with rates rising as well? Generally, the fixed rates are in the mid fives or higher currently. So our advice, because what we're predicting is that the variables, yes, they are high, but they will be held and then come back down. We still don't recommend locking into a fixed rate, as the fixed rates currently are extremely high. And what will happen is, if the rates do come down in a year, 2 years, it'll be very expensive to get out of that fixed rate mortgage. So you are essentially locking in at what we feel is near the peak currently. Of course, if that changes, if the data completely changes and the predictions are, okay, variables actually won't be held, they may be increasing, which there's nothing to suggest right now that's the case, we'll let you know, of course. But currently, as we stand, we're not recommending locking into the fixed because of how high they are right now.
Yeah, the flexibility of the fixed rate products and are with the penalties and that sort of thing can be very high. So that's why we're not really recommending locking in at this time, is because the expectation is in a year from now is we're going to have lower rates. And if we want to drop down from a high rate to a lower rate, then the penalty can be quite expensive, whereas with a variable, we can just ride this out for the next year. Lastly is, if you are having any challenges, if you need to chat with us, we are here. Let us know, email us, schedule some time. We're happy to connect with you and see if there's anything we can do with any of your situations, if they happen to be unique to you and the situation with you and your family. So I hope you have a great week, and once again, please reach out if you need anything, and take care.
Thanks.